I remember this phrase, hearing this many years ago when I was probably in my mid-20s, and I was talking to this guy who would be a great kind of a mentor for me at one point, and he basically said, "Hey Brian, if you're not at the table, you're probably on the menu." I remember Mickey Malka telling me, "Hey, you should try to buy ZAP," which was the large company, and at the time they were 10 times larger than us. Wow. And I was like, "This is nuts! Like, what? How could we go buy this asset that's like way bigger, owned by a super well-funded media group?" And so I actually tried to approach them, and that was not taken very seriously. Probably I wouldn't say laughed out of the room, because I didn't actually get in the room. I was still not at the table.
Brian, how's it going, man?
Hey, it's great, man. Thanks for having me on, man. Good to chat with you. It's been all of 2 days.
It's been 2 days since Miguel and I did your show.
Yeah, awesome. So thanks for returning the invitation here. So yeah, man, it's great to be back. We just chatted a few days ago. You were on my podcast, and now you're returning the favor. So good to chat with you today.
Yeah, you as well. I think kind of for the audience here, Brian Requarth is a legend in the startup ecosystem.
Big overstatement.
Brazil,
Big
Latin
overstatement.
America. Founder of VivaReal. We're gonna talk a bit about that. Had a big exit, and is now building Latitud, which is, if you're an entrepreneur in Latin America and you log into LinkedIn, you're probably going to see some Latitud stuff every day.
Yeah, apologize for that. It's a reality though.
No, it's awesome. Brian, why don't we just get started here and talk to us a bit about how you ended up in Latin America and maybe your origin story of where you're from. And
sure, I grew up in a small town, little hippie town. It's less hippie now and a little more chique, como se fala en português. But I ended up traveling a lot as a kid. My parents took us on like cool vacations in different places. Like all my friends were going to Hawaii and Mexico, and I was like going to Egypt and random places across the world. And so I think that probably instilled some interest in the world and wanting to travel at some point. And when I graduated college, I ended up getting in my car and driving south with a friend. We crisscrossed Mexico for about 6 months, got to Costa Rica, and I bought a one-way ticket to Bogota, Colombia. A lot of times there's a woman behind these stories. So my wife...
Yeah, what was the reason for this trip?
Yeah, it was more of a trip of like, hey, we just finished school. We don't have any responsibilities. Let's like go for an adventure. And the plan was actually to make it down to Patagonia. And so we got to Costa Rica, and then we sold the Burro Blanco, the white Nissan Pathfinder that I had, and bought a one-way ticket to Bogota to visit a girl essentially that I dated in San Diego when I was at school. And that plan was to be there for 3 months, and 3 months turned into 6.5 years in Colombia. My entrepreneurial journey kind of started out of necessity, living in Colombia to pay the bills, and then kind of things evolved from there.
Was VivaReal the first venture you did here in Latin America? Or?
No. I did so many different things. I first started an English school called English Without Borders. That was, just like the only thing I could do at the time because no one would hire me for anything. And so I taught English. I kind of walked the streets of Bogota trying to sell my English courses, and got a few contracts, enabled me to extend my stay longer. And then serendipitously, I met my co-founder paying a fine at immigration, Thomas Florax. We had overstayed our visas, and I saw his German passport, and I remembered I had a student that wanted to learn German. And so I struck up a conversation with him, and it turns out that he had an interest in entrepreneurship, had a little bit of a tech background, building websites. So we put our heads together, and we ended up building our first company, which was called Colt Connect. Colt Connect was basically, we did kind of websites and, marketing, mainly websites for any company essentially. Then we evolved into translation services, and then we kind of hammered into a niche of bilingual, real estate agent websites. templated websites. I had a terrible experience finding a property, and so I kind of got my interest perked up on the real estate market, and we were selling into the U.S. from Colombia because it was right around the time when voice over internet protocol kind of launched, and so we could make almost free calls to the U.S. And so we built up that little business to about $50,000 a month in recurring revenue. And then, like a ton of bricks, 2008 came crashing down, and we were hit with the financial crisis where our customer base almost evaporated overnight.
Your customer base at the time was in Colombia?
Our customer base we were from Colombia, but we were selling to Spanish-speaking real estate agents. So when the real estate crisis happened, the global financial crisis, real estate was obviously at the center, and the Hispanic market was even hit harder. There was a lot of subprime activity there, and it was just something that our customer base was in real trouble. And we realized that building websites was not really enough. We needed to find customers for our customers. And so that was when we kind of evolved and planted the seeds for more of a marketplace business like VivaReal, where we could aggregate all the inventory and solve a consumer problem.
So what year did you start VivaReal?
Officially the company, I would say, started in 2007. But we started out with we'll build this marketplace, property portal for Spanish-speaking agents because we had the other business. And then we were like, let's do something for expats looking for real estate in Latin America. So then we had everything in English, focusing on Costa Rica, Panama, Mexico. And we, kind of evolved. And then as the real estate crisis got just worse, we just started looking kind of more to local markets in Latin America. And so it was April 2009, we launched the website vivareal.com.br, and we actually launched in multiple countries, Colombia, Mexico. And soon after, we realized that Brazil was just this much larger, interesting market, and I ended up linking up with Diego Simon, who was became Thomas and I's co-founder, and he was Brazilian, and so we ended up going AAB, all about Brazil.
AAB, I like it. I'm definitely AAB. I'm in that camp as well.
Yeah,
awesome.
Big market.
And then give me the high level. Start in 2008. Did you raise some venture funding right out of the gate?
No, we got our ass handed to us whenever we tried to raise money. I got rejected by about 30 investors. I remember going, flying back and trying to raise money in San Francisco, and it was just a real struggle. So we bootstrapped the company.
Time, I guess there wasn't probably less than a handful of venture-backed companies in the
you could
region,
count the number of investors on one hand for sure, and there wasn't a lot of venture-backed companies. It was a real struggle. We kind of went the friends, family, fools route initially, and I think we raised like $535,000. I mean, first it was just actually in the beginning. What it was is I sold my apartment and I put all the money into the business. And my college roommate, who had an exit when he was 27, he actually, funny story, we were working on a business a little bit. In the beginning, it was a ticket business with another roommate from Holland. And the two of them went off to England and launched this business, and super bootstrapped, and they ended up selling the company for a fair amount of money. And he became pretty wealthy at 27. And I, instead of going with them, I chased the girl down to Colombia. So we ended up reuniting, and he had an exit. He was 27 years old, didn't know what to do with himself. So he ended up writing us a fairly large check along with my dad. So the three of us financed the business and the transition from websites to VivaReal through the financial crisis. And then it got too much for everybody. We just couldn't afford it anymore. And then we managed to kind of eke out a little bit of money from some family and friends. And then it wasn't until 2011 that we raised venture. I raised a Series A from Kazakh and Monarchies in 2011, December.
Cool. You ended up raising what, $70 million throughout?
Yeah, about 74 million.
And then you guys did a merger, kind of two big companies in the region doing very similar things. Tell me a bit about that.
Yeah, what happened was early on, I had kind of an interesting insight into the industrial logic of our market was that there would be a combination of some sort at some point. So I remember this phrase, hearing this many years ago when I was probably in my mid-20s, and I was talking to this guy who would be a great kind of a mentor for me at one point, and he basically said, "Hey Brian, if you're not at the table, you're probably on the menu." And so I was like, okay, note, point taken. And in fact, I remember Mickey Malka telling me, "Hey, you should try to buy ZAP," which was the large company. And at the time, they were 10 times larger than us. Wow. And I was like, this is nuts. Like, why? How could we go buy this, asset that's like way bigger, owned by a super well-funded media group? And so I actually tried to approach them, and that was not taken very seriously. Probably I wouldn't say laughed out of the room, because I didn't actually get in the room. I was still not at the table.
How'd you end up getting the deal done ultimately?
We got at the table because we just executed insanely well for 3 or 4 years after that. And we closed what I was calling internally, to kind of, rile everyone up, is let's close the gap ZAP, or the ZAP gap, sorry. So we'll close the ZAP gap. And, there was a large difference in terms of traffic, listings, revenue, customers. And so every month we were just kind of chipping away at our our competitors, and we had a couple other competitors also. Tiger had funded one of our competitors pretty heavily. So so we were kind of definitely the David in the kind of David and Goliath story. We were underfunded. I'd say kind of slept on in the beginning, because I was a foreigner. There's a lot of other reasons to think that it wouldn't work. And what we just did was there was a moment, kind of an epiphany for me, when I realized that we should focus on Brazil. I remember being in my apartment in Bogota, and I remember going to Google and typing in, and I know you can relate to this because you built a website with a lot of SEO. I typed in apartamentos à venda em São Paulo, apartamentos à venda no Rio. And I remember at the time there was this tool that could kind of tell you an estimated amount of search volume. And I was blown away by how many people were searching for real estate. And then when you clicked on the first links, it was like this flash website, and there was no property information, no pictures. And so we just obsessed about that for several years. My co-founder got really good at SEO, and we did link building and all that, and built a super indexable site. We kind of reverse engineered Trulia in the US, who had killed it in SEO. And we basically just closed that gap. And then years later, they kind of came back to me. I saw the CEO of ZAP at the time at a conference in Madrid, and he was like, "Hey, we should talk about doing a deal." And I was like, "Cool." And in his mind, he was going to buy us, and then in my mind, I thought I was going to buy him. So that was then a difficult process, but we eventually got to a deal that was worked for everybody.
Who bought who?
So it was an equity swap. So what I was obsessed about, when you're doing deals like this, there's a great kind of way to think about it, where you think about what are all the things that the other person cares about, what do I care about? You kind of write those down, and then you're kind of trading, right? You're trading the things that. And I knew that it was important for Globo to, have the brand, and frankly, ZAP was a stronger brand name because they had done a lot more TV and other things. And, I knew it was important that they look good in the deal. For me, what I cared about was the longevity of the business, the future of the business. I cared about the little bit of the control of the operations. And so we did an equity swap. The equity swap was, we ended up taking a little less than 50%. But I became the executive chairman, and then Lucas took the CEO role. So I didn't want to give up the management piece, because I knew that, if we were going to have to build this company in the future, it would be someone leading it from our team, because frankly, we'd out executed everyone else, and I saw it as a potential risk if, so we had to kind of drop our egos a little bit. And, that was a bit of a tough pill for them to swallow, that, they weren't going to be in control of the operations, but then they, so the deal ended up becoming 46% our shareholders and 54% Globo. And we just created a new company and kind of slid the shares into the new company. So it was fine. I think that at the beginning of the conversation, in their mind, it was probably something more like they were going to acquire 70% and we would have 30% or 75. But it was kind of undeniable that we were growing at a faster rate and that, we had done more with less resources.
Awesome. How long after that did you guys end up selling the business?
So we merged it was in this 2016, right around the Rio Olympics, because I remember I transitioned from CEO to chairman right around the Olympics, because I ended up going there and kind of ripping the Band-Aid off and saying, okay, everyone, you report to Lucas now, and then Lucas took it over, and I just tried to disappear. And it was actually good advice from Julio Vasconcelos, and he said, you got to just disappear. You got to hand it off. And again, Mickey Malka told me, hey, you can't, steer the ship from the shore. And so I kind of just disappeared for a few months and let, if anyone had any issues. Very soon after that is when we had those conversations about merging. And so it was actually good timing because Lucas could focus on the operations and I could handle the negotiating with Globo. And so I think the deal closed the following year, 2017 maybe. Maybe it was a little longer, but maybe the end of 2017. So it was about a year and a half. And like we dated and flirted and then, and then we got serious about the conversation. And then after we combined, relatively quickly OLX, we had a conversation with them. And in fact, when we were thinking about merging with ZAP, I was actually talking to OLX and, looking at doing a transaction with them as well, right? And so, but that kind of just didn't go through, and they probably wanted to see how the market would shake out. And so, when we did the merger, what it did is it solidified our place at the table, and it left a few other players out, but that was what I wanted. I wanted to be in the game.
Awesome. So you ended up selling for $600 million or something like that?
It's funny because the deal, I'll give you a little inside baseball here. The deal was negotiated in reais, and this is an interesting lesson for me. And so the deal at time of signing the LOI, the transaction was $735 million. And
the conversion
in dollars.
to dollars.
Yeah. And the dollar just started kicking the real's ass, and I would look at the real every other day, and I'd be like, oh my God, we just lost $5 million today. Oh, we're down $20 million today. Oh, that's just, and so it ended up landing. I'd have to go back and do the exact pricing, but on a blended average with all the earnouts and stuff, it's probably right around 600, somewhere between kind of, probably 580 and 620. I don't know. But yeah, it ended up being a fairly significant deal. It was 2.9 billion in reais.
Awesome. So you go back to the U.S. What are you doing after VivaReal?
I'm walking my kids to school every day, and I'm talking to the team still because until we closed the deal, I would talk to Lucas regularly, but I wasn't deep in the operations. And I kind of took a little time, but I was still working, and I was still kind of playing that kind of chair role and being active with the company. But I definitely, I moved into my little house that I had, and I'd walk my kids to school, make them breakfast, and it was an important moment for me, and it was a tough decision because I really had to kind of not listen to my ego, which was you're the CEO of a company. It's exciting. I gave up some financial upside. It was challenging. So I moved back and I spent more time with the family and spent some time thinking about what I wanted to do next. But really it was a bit slower, but still there was, ins and outs where at one point, we decided before we sold, to OLX, we ended up having to try out and go raise money, and that was an option. We kind of didn't nail it with that, and so we were trying to kind of run a dual process of selling and raising. So it was a bit of a, so I was kind of help leading that process to make sure that we could think of what the next, the next stage was for the business.
And you guys finalized the deal with OLX when?
The deal Signed it March 4th, 2020.
Okay. This is like a week before the pandemic.
If we had waited another week, it probably would have derailed the transaction.
Amazing. That's when you and I started getting to know each other a little bit better. I was living in San Francisco at the time.
You came out to my house here.
Came out to your amazing house in wine country.
Yeah. We had a nice little chat by the pool, and it was cool. It's fun to think back to that, because that was, now it wasn't that long ago, but it's we're talking like, it's probably 3-4 years, right?
Yeah, and I'm guessing, given you started Latitud, or at least the idea for Latitud kind of started around that same time, early 2020. I'm sure it had something to do with your experience building a startup in Latin America, all of the pains, the frustrations that you would feel. Maybe you could just tell us what Latitud is, and why did you guys start it?
Yeah, Latitud, really, I would describe it as, you can think of it as the operating system for venture-backed startups. And what that does is we have identified a series of pain points as founders that, we both experienced and many other founders experienced, from everything from incorporating your startup to getting offshore, bank accounts, to tax compliance, to fundraising. There's so many different kind of, como se fala en portugués, perrengues, many different challenges along the way.
It's like the infrastructure layer of building a startup.
You can think about it like an infrastructure layer that is
value add, but it's necessary.
It's reducing friction for founders so they can focus on the things that matter, and that's building your company, building your product, building your team. So we wanted to, we started out essentially, even before we built the products, we started out really just helping founders. So I dedicated a fair amount of time while I was waiting for the transaction. I was writing a book. I wanted to share some knowledge with founders.
That's a great book, by the way, Viva the Entrepreneur.
Yeah, Viva the Entrepreneur is actually right here behind me. I've got a bunch of copies here. And the book, basically, I wrote the book that I wish I had when I started VivaReal. And so that was a very deep moment for reflection for me, where I was thinking about all the challenges, thinking about what I screwed up, thinking about what I wish I would have avoided. And then I started having conversations with founders, and I kept hearing a lot of the mistakes that I made happening, or concerns, or self-doubt, or all the things that are related to just the early stage founder journey. And so after 150 Zoom calls, while I'm waiting for the antitrust to approve our deal, I start kind of getting ideas about stuff, and I start just helping these founders. And so the first kind of iteration of Latitud was, there was a group of 40 founders. I had met, 150, and I'd kind of picked 40 out, or just through my network. And we decided to host a couple sessions. So this is with Gina Gotthilf, from, former VP of Duolingo, Yuri Denelchenko, who is the CTO of Escale, Tommy Roggio, who I had been kind of talking to, and, talking about some investment stuff with him, and a handful of others. And we basically just started helping these founders, pulling in our network and hosting sessions about very specific topics that address pains for founders. So we ended up building a community, and first you build the community, then you listen to the community, and then you solve problems for the community. And that's when the tech product layer happened.
Since you guys started doing that, for me, it's become a playbook that I think a lot of startups can follow, which is build a community first, and then start building products for them and start monetizing it.
Yeah, it's kind of like a new way of thinking about lean startup, is where you just basically, if you go out and you kind of help people, you make yourself available, you listen, you support them, you build value for them, and then you encourage them to build value for each other. Then there's all these kind of points that people connect, and they connect them back to you, and then you can understand what their pains are, so you can discover. We have Slack groups and WhatsApp groups. I looked at the WhatsApp group in Mexico the other day, and everyone's like, "Gosh, I really need help with getting an FX transaction done, because this is the rate, this is what they're charging." And we're like, boom, let's go build that. So now we have a product that you can do foreign exchange, and you can bring money in from offshore to your local entity. So it's quite an interesting way of building, because you kind of learn with your customers, and you get early adopters, and you get promoters of what you're building because they kind of ask for it.
Yeah, it's similar to what like Mr. Beast and Logan Paul and some of these influencers are doing with their brands, which is they've already built the online community. People like them and trust them and respect their opinion. And then they figure out, okay, what are the products or services that I could sell to this community?
Totally. I think it's a pretty good proxy, with the exception of like, definitely small on a smaller scale and a very niche target, which is Latin American startups. So
it's a
Mr.
B2B
Beast,
play instead of a mass.
It's a
mass
B2B.
consumer.
It's a B2B. It's like a B2B version of that. I think that's a fair assessment. I would say it's a little generous in the analogy for me, but I appreciate it.
Well, when you walk into that conference next week with 4,000, 5,000 people, you're gonna be a rock star.
Hopefully, it'll be the Coachella of startup land.
So early 2020, you start building this community. You start adding value. You're not asking for anything. When did you guys decide to turn this into a venture-backed company?
We had an offsite in December 2020. We flew to Rio, and then we went over to Laranjeiras, and we stayed at this like Airbnb, and it was super cool, right on the beach. And I had been thinking more about it, but we spent like 4 or 5 days working on some stuff, working on plans, and we sat down in the living room, and there was probably 5 or 6 of us sitting around, and I just started drafting a memo, like in my mind of, what are we building? What does this look like? What can we do with this? And we started constructing a narrative about what potential problems we can solve. And, we showed that we had some validation of initial ideas. And then, I ended up started talking to a handful of friends on my way back. On my flight back, I texted a few friends and I was like, hey, I might go raise some money. And then, there was a lot of conversations that spreads fast when a second time founder that had an exit is going to go build the business, like the WhatsApp,
the VC world hears about it somehow.
Yeah, they do. It's a bit of magic. And so we ended up having conversations shortly after that with a handful of investors. And I had like a pretty clear idea of some of the partners that I wanted to work with. And so different than what I kind of advise founders, I kind of focused on just a few investors before I went out to the market, which, I think is like, it's a bit of privilege if you're a second-time founder to be able to do that. I had a couple options, and I kind of honed in on them. And actually, I wrote this article about it, which is on our blog. And it's, if you search for like Latitud seed round blog post, you'll find this article where I reflected on kind of how the entire process was and what criteria we use to select our investors, because I like to flip it around. And what we did is I was already funding the business, right? I had already put in, close to $1 million. So like I was prepared to write another $1 million check, another $2 million check if we needed to. So that's also very helpful when you're negotiating with investors, because you're like, look at either I'll fund it or you will. And that, you can kind of mark your price that way. And we basically identify the qualities that we cared about in an investor. And then we took all the investors and we ranked to them on a 1 to 10 scale with like a multiplier if it's something we valued even more. And then we had like this calculation of who we wanted to work with. And it turns out that the best kind of partners for us were Andreessen, NFX, and Canary. So we ended up taking money from those 3 kind of funds along with a bunch of others, FJ Labs, David Velez wrote a check, another 100 plus founders, Stelio Tolda, and it was it was a quite large round, and I'd say that our timing was pretty good because things just started falling off, and we managed to kind of cobble it together at the end of the boom cycle.
Yep.
So that was a bit of luck and timing.
This was a $12 million round.
Yeah, it was. We've raised 13.8, I think, and the first kind of pre-seed, which I did on my own, I think this round was around 13 million. So I think I had done about 800K initially, and then I invested a little bit more in the round.
Cool. So you got this money in the bank, you've got a team, you're building this community. Can you walk us through the products and services that Latitud offers founders today?
Sure. So the first one, which is not actually a tech product, but we also invest. So I didn't mention that, but simultaneously we had been investing, and initially it was just me investing. And then we spun up our first kind of fund on AngelList, which was a $12 or $13 million fund. And we started investing. But in terms of the tech products, the first product that we built, which was a really hard product to build, it was a product to automate as much as we could the company formation process, because when I had sold the company, we ended up paying large capital gains taxes in the US despite having zero operations there because it was a C Corp. And we saw this trend of more startups and more VCs wanting to invest in Cayman holding companies. And so we automated the company formation with the Cayman sandwich, the Cayman holding company. We kind of coined that phrase, the Delaware LLC, and then the local operating company. Because I saw like the large law firms or like tech law firms were charging anywhere from $25,000 to $35,000 and up. Yep. And I had started Latitud and I had to pay, the $40,000 fee that came with starting Latitud. And so we wanted to make that less expensive. So we did that. We realized it wasn't like a super like lucrative or long-term product because it doesn't have any recurring revenue to it. It's just a one-off. And we were able to carve out a fairly good margin over some time. But it's just a product that's a wedge, right? It allows us to kind of see the startup early, build a relationship with them, solve an important problem with them. And then what we did next is we realized that there was, I was the first customer of Silicon Valley Bank in Latin America, or one of the first. That's the word. And I know that I'm very grateful of what they did for the region, and they're awesome in many ways, despite what happened. But the truth is, they were kind of the only option in town, and it wasn't exactly efficient setting an account. Sometimes it would take weeks at a time, and so it kind of left the door open for us to create offshore accounts. So we quietly launched Meridian, rebranded as Latitud Finance. So we have Latitud Formation, which is the company formation. And by the way, we also do flips. So if you're a limited company and you raise a little bit of money into the your limited company, your limitada, we can take that and replicate it and to flip it into an offshore structure, into a Cayman structure. So that's another product.
And so the difference in if I go use Gunderson Detmer or Latitud, what's the difference in pricing? What's the difference in kind of like how much work I need to do on my end?
Well, the good news is you get Gunderson quality at a lower cost because Gunderson actually drafted the documents. So, they're partners, and we actually work closely with many law firms, BCP, Gunderson. We've done work with Wilson Sonsini, we've done work with Pietro Netto, with, all of the, kind of local and global law firms. And because frankly, they don't really make money on this formation process, They have to charge a lot of money because it's expensive operations, they have paralegals, but they don't really like doing it very much because they'd rather do your Series A round or an M&A deal or whatever. So we do that. Normally it costs anywhere between $25,000 to $35,000 and up for a formation. Sometimes a lot more for a flip, depending on how many convertible notes you have and how kind of messy your cap table is. So we're able to do all of this typically under $10,000. Sometimes for a flip, it'll go a little over that. But yeah, anywhere from kind of 70, 75, $8,000 to kind of 10, 11 grand is the range that usually lands, depending on kind of the menu of options. So it's about a third of the price and it's the same quality, but it also is accompanied with a very product centric experience where you're getting updates. You can see in the flow where you are. It explains things in super clear English, and it's just a much more kind of product driven experience rather than getting all the emails and then not knowing where you are in the process. And I had experienced that, and it just wasn't a great experience for founders.
Yeah, that back and forth with lawyers is painful for people like us.
It's painful, and I went back and I was like, oh my God, we exchanged 160 emails, and it's just like this could have been 4 emails and everything else is just online, and you don't have to read attachments, and send attachments. So yeah, so that's what we built that product.
I actually met with a founder like 2 hours ago. I won't mention his name for, I don't think he needs his name mentioned here, but you guys, Tommy introduced us to him, Miguel and I, because they used Latitud to form their company. Yep. And then you guys saw what they were building, reached out and said, let's talk about maybe an investment. So you guys are an investor in this company, and we're looking at it right now as well.
That's amazing. A handful of our investments, I don't know what the exact number is, but I would say it's probably 30 to 40%, maybe more. I'd say 30, 40% of the deals we've done recently have come through Latitud, the Latitud formation products. So it's pretty cool from like a standpoint of, identifying those companies early, because these companies are really early, like they don't exist, right? So we kind of bring them into existence, and then we have limited capital, so we can't invest in every single company, and they're kind of separate teams. But our team is now trained where when we evaluate a founder to see if we can flip them or do their company formation, that team knows that what to look for in a venture-backed company. Is this a second-time founder? Have they worked at a top-tier company before? Is it a large market opportunity? So like everyone in our company kind of understands the venture game, because our products are very centered around startups that are raising venture. So it's, and we want to onboard them into our Latitud Finance product, which Latitud Finance is our second product, which is offshore business accounts for startups. So it's an efficient FDIC, insured accounts up to $5 million per account. So if you have two accounts,
I don't need to have an account with Silicon Valley Bank. I can use you guys.
Yeah, exactly. And there's a couple other players that play in the mix, that are doing this as well. But the great thing about this is it's really tailored to founders in Brazil and Latin America, because when you take the money in, first of all, we pay fairly good interest on that money if you keep it in dollars. So if you want to take 60% down to Brazil for your operating, we pay out interest, and most kind of business accounts don't usually pay out interest. And so you can make 3% on the USD, or you can bring down as much as you want down to Brazil. And we actually have an integrated foreign exchange product. So we have integrated FX, where we bid out a bunch of the transfers, and I compared us with all of the large kind of banks, and we're more cost efficient. More importantly than the money, which is very important for an early stage founder, we're at about 25 basis points over the spot rate, which is typically more like 0.5% over to 2% even, depending on who you work with. And a lot of these fees are really hidden and disguised. So we built kind of almost like a TransferWise product, where you go in, you see this is how much you're sending, this is how much you're going to get, here are the fees. Aside from making it less expensive than other players, we actually take care of all of this headache stuff that you have to do as a founder. You need to, amend your contrato social. You need to file this with the central bank, and these are things you have to like hire an accountant to file it with the central bank. And we actually just do all that, and it's embedded in our product. And you can see it super transparently, the pricing for everything. So that also makes it really, really nice. So that's the second product. Should I keep going?
Keep going. Let's hear it.
Yeah. The third product is, and again, these are all things that are just like, Derek,
this is great because this is the shitty part of being a founder that nobody wants to do, but is important. Everybody should be focusing on customers and product development and figuring out product market fit, right? Not dealing with lawyers and accountants all day trying to get your legal entity set up.
Oh man, I hate all this stuff, which is kind of, maybe I'm a glutton for punishment here, but because now we're like becoming experts in legal entities and foreign exchange and and all these other things. This last one is probably the thing that I'm most allergic to, and we decided to tackle it, and that is offshore tax and compliance. I mean, can you get any more fucking boring for a founder? Like, to make sure you're compliant.
But that's like that's me and a lot of my friends' biggest headache every year.
It's such a pain. It's such a pain. And so what we went ahead and did is we started, we've got kind of something that we can announce shortly here, but we went in and partnered with someone. We acquired a company that already focused on startups. She's bringing her customer base with her, and we will then automate a lot of the things that she does already for the single member LLC filings and all the FBAR and all the additional things that founders need to stay compliant. Which this stuff is just mind-numbingly boring for a founder, and it's a distraction. And if you fuck it up, like, it's bad. It's gonna cost you money and time.
The famous blog post that you wrote a couple years ago is you guys missed out on like $100 million or something because you
we lost $100 million in capital gains taxes. We had the wrong corporate structure. Like, these are all things that, like, there's so many traps that are set for founders in Latin America that it's can we figure out how to help founders navigate these minefields so that they don't have to worry about it. So we want to be the kind of the see in the dark goggles, so that you're just not getting caught in all these different potential traps. So anyways, that's the third product. So we have Latitud Formation, we have Latitud Finance, and then we have Latitud Compliance, and those are our three main products. And what it did, the last product, it turned our company formation product into a recurring revenue product, because we then form the company, and now you can, maintain the company with us. So then we have recurring revenue every year.
Are you guys still doing the the accelerator cohorts?
So we actually decided to evolve the cohorts into applications. So we kept the application process. So you have to apply to get into Latitud. What we did is we researched to find out what people valued the most about the community. And what they really valued was the network, the community, the access to $250,000 of deals that we put together for them, the events, the local gatherings, the WhatsApp groups. And so instead of just, having a 6-week intensity of like speakers, which it was cool, but we found that it was hard to attend everything, and it's a distraction for some people that are building, and some stuff is more useful to other founders. So we still host sessions that we think are really kind of salient topics, but we now make it more flexible. And it's kind of like you enter the community and there's like no start and end date. And then you can jump into any of the sessions we have. You can join us for our local gatherings. And then you can meet other founders and share with them your experiences and kind of help each other. So it still has a stamp of Latitud, because we don't just let anyone in the community. You've got to be a top tier founder with big ambitions and good experience. But we're still admitting, and what we've been able to do is we've gone from, like, our last application, we had 500 applications in like a week and a half. And so we kind of, with some real clear criteria, we will narrow it down quite a bit. And then we make our selections, and we do actual interviews with the founders to see if they're admittable in our community. And of course, like, this is, it's part of the flywheel. We identify those companies that we can invest in also, potentially. So we flag those for the investment team. And the investment team actually does some of the admitting into the community. We learn about these companies, what they're building, so we know if they're about to raise a round, which then we can, we know if they have a company formation set up because we ask them. So this is all kind of top of the funnel for the products we're building. And then we try to build mechanisms in there to help them. And, regardless if they become a customer, we don't just help people that are only customers. We help everybody. We build tons of goodwill. And then, of course, like, people want to work with us.
No, it's a genius marketing strategy at the end of the day. Add a ton of value, don't ask for anything in return, and then just start adding more value that you can actually monetize.
Yeah. It just comes from this give first mentality, right, that we all had in the start out. And we truly like to help founders, and it feels good. And it's nice to see when someone succeeds. And so I think that if you have this mentality of trying to monetize every single interaction or every single conversation, it limits it caps your potential. And it actually, it reduces the serendipity that you could experience, the chance encounters, because you're only kind of filtering for some things to happen. And then all of a sudden you manufacture serendipity.
Yeah. Let's talk about the Vamos LatAm Summit which I believe is the second edition this next week.
It's the second edition. We put this event last year together in about 3 months. So it was like total insane process to throw it together. And it was a hit, man. We had 1,300 founders there and investors, and it was full capacity. And so, at Latitude, we like to level our game up. So we decided to do a little bit bigger this year. We ended up acqui-hiring an events company run by Adriana. Adriana, did events for Endeavor and, for other VCs. And along with Adriana, Giovanna, who's on the team with her, we brought them both over. And then I reconnected with my former co-founder of VivaReal, and he helped build an event business at VivaReal. We had the largest real estate tech conference, which actually just took place last week, and it's, I don't know, like 10,000 people now. It's just a monster. And so we kind of took the same playbook of bringing people together. And this actually all stems from a funny story. When I was starting VivaReal in the early days, there was a guy by the name of Simon Baker that I wanted to connect with, and I talk about him in the book a little bit. He was the former CEO of REA Group, which is a multi-billion-dollar real estate portal. And when I tried to get him to invest in the company, I chased him for a couple of years, and then 2 years later, I finally said, Simon, we just want to bring you down. So I ended up hiring him as a consultant. And a week before he could come to Brazil, I had to figure out how to pay him because we had no money at this time. And so we ended up just throwing an event, and I invited him to be like the keynote speaker of the event. It was like basically just him. And then I charged all the real estate brokers to come listen to him speak, charged for the event, and I got 2 sponsors. So I took the money, made money on the event, paid him back for the event, and then he got super excited because he saw how scrappy we are. So the genesis of the Vamos LatAm's Summit stems from this kind of scrappy mentality of bringing everyone together and building value for people. And so we kind of developed a playbook for this for the real estate market, and we're applying the same playbook for the events for the event with Vamos LatAm.
Yeah, tell us about the event next week.
We are standing at about 4,560 something people that have already, as of today. So I don't know when this will air, but we've got 4 or 5 more days left.
A lot of folks from abroad are coming down as well.
Lots of people. We got Lightspeed coming down. We got handful of global VCs, founders from outside of Brazil, all over the place: Colombia, Chile, Argentina, Uruguay, Mexico, the U.S. There's some founders from Spain, Portugal. So it'll be truly a global event. 72% of the attendees are founders. So this is a place where you're going to be sitting there talking to a bunch of friends and people and get inspiration from founders that maybe are a little further along the journey. Our speakers, we've got 50 plus speakers. Ben Horowitz is going to join us via Zoom. I'm going to interview him. I'm doing a keynote kind of. It'll be like a TED Talk style presentation. Sebastian Mejia is going to be there, which Sebastian from Rappi rarely does these kind of conversations. He's coming down, and we're going to have a super frank and open conversation. Hernan Kazap,
our friend Ed Weibel, and he never does this stuff.
Ed, I've never seen Ed on any panels, and Ed, I was like, Ed, man, I would love to have you come here and just chat. And he was like, I was kind of surprised. I was like, shit, it feels like, you take a swing, let's see, and Ed was like, yeah, I love it. I love the initiative. So that was just,
Ed, for the audience, is the co-founder and former CTO of Nubank.
Yeah.
Many would call the best technology leader in Latin America.
Yeah. The guy, he was like the benchmark for everyone as they were building their tech teams, and it was just and the guy is just so smart and so thoughtful. And so, yeah, we got founders of, 35 billion dollar companies joining, and and incredible breakout startups, and we got the first unicorn, Paulo Veras, and then the last unicorn, Daniela, who from Pismo, and we got my former CEO Lucas. We've got just all kinds of great caliber speakers that are going to be joining us. Mercedes from Lightspeed, running a I don't know how many $billion fund. So it's going to be a blast. It'll be fun. It'll be full of energy, and it's going to be a great time to be building in LatAm.
Yeah, I'm looking forward to it. Amazing. Well, Brian, anything else you want to talk about?
No, man. I think we covered it. Thanks a lot for making the time, and I hope to see anyone there that's listening, and we're excited to continue to build the tech ecosystem together. It's important to have these partnerships with other investors, with other, with the founder community, and it's still early days in LatAm. So, vamos LatAm.
Yeah, well, thank you so much for what you're doing for founders and investors in the region. You're making life much easier, and so yeah, thank you for everything.
Still hard as shit, but hopefully this will make it a little easier.
Amazing, Brian.
Thank you.
Thank you so much. Talk to you soon.
All right, man. Okay, cool.